Okay.
Now it's recorded. I think you got to click like OK or something or accept. All right, so yeah, I'm gonna allow you to share the screen. You can show me everything that you're looking for. It ain't even gotta be detailed as hell. It could just, you could just show me your chart, show me everything that you be looking.
Okay.
And then once we get done with that, I'll go into mainly how I trade.
Got you.
It should be unlocked. You should be able to share your screen now.
Now you see it?
Yeah.
Okay, so normally what I do, I'm gonna go right here to a higher time frame. So what I'm looking for is key levels in the market.
Yeah.
Pretty much just stuff that lines up. The wicks. A lot of times what I do is I'll switch to my line chart so I can see it. The reaction is a little clearer.
Yeah.
Okay. So from there, I'm looking at my overall bias, which is, is bearish. Bullish.
Mm-hmm.
All right.
Yep.
What I'll do is I'll scale down to my 4 hour and I'll tighten up those zones. Okay. So I'll go through and I'll just tighten up the zones, see where everything reacted from.
Yeah.
And I'll keep scaling down to my 1 hour. And this is where I really start to look at, what's happening in the market. So I'll give you an example of this trade here. So what I would do is I see that lined up, okay, and I could tell by boom, the reaction. So I think that's a key, valid key area.
Yeah.
So I would switch to my double screen, 1 hour over here. And what I've been doing is actually scaling down to the 1 minute. And I'm looking for the minor break in structure and retest or momentum in the market, right? So when I see the shift in momentum, so what I would do is, like, let's say here, and I'll make that blue. Okay.
Yeah.
And I switch back and forth to my line chart so I can see it.
That's good, bro. That's what I do the same.
Okay, so as I see it breaks with structure, it comes up to retest. Like, I probably wouldn't take this because it didn't come up all the way, but I'll wait for another break. I'll look for another break. Or if it continues to make lower highs, okay, like I would take an entry from here. And I'm just putting it outside of my exhaustion. Okay.
Yeah.
And I'm targeting 3 to 1. And I keep it that simple.
Okay. Yeah.
Now, a lot of times, what happens to me is I'll be up and let's say it doesn't hit my 3 to 1, which it won't. Okay. Boom. Doesn't hit. A lot of times I'm looking at it, I'm like, okay, is it just coming up to create a lower high where I can scale in and continue to move? And sometimes I just fucking let the shit retrace and end up, boom. Getting fucking wicked out. I hold it too long thinking that, it may come back up, retest this original break, which it did.
Yeah.
Right? It came back up and that would have been a better entry over here. Yeah. But I'm getting in way over here and then holding
Yeah, I'm gonna help you. I'm gonna help you with this, bro.
Hey, let me grab my earpiece real quick because the volume's real low. I'll be right back.
That's cool. Yeah.
All right, I'm back.
All right, let's get it. Yeah, bro. What you showing me is good, bro. You showing me that you know what's going on. I'm glad you use line charts. I'm glad you understand structure. I can show you either. I can show you either way, bro. Hold on.
Okay. Hold on, man. This volume is.
Can you hear me?
Got
All right. So what I'm like I said, I like the way that you showing me structure, showing me higher time frame analysis. What I'm gonna do is show you how to trade on a bigger time frame, and then I'm gonna try to show you how to trade on a smaller time frame as well. Right.
Okay.
Let me see if let me share my screen. All right, can you see my screen?
Yeah.
All right, for right now, I'm gonna minimize this one. Boom, boom, boom. And I'm gonna clear this up. And then what else I wanna do? I wanna take off these lines so you can see. This one, show period separating, take off period. Boom. All right, I'm gonna show you something. I'm gonna go straight to the 1 minute strategy first, right? I'm gonna show you structure first before we even get started. Just a refresher, you probably already know about it. But can you see my screen still?
Mm-hmm.
All right, hey, hold on. All right, so look, in structure, in the uptrend, we have what? Boom, what's
Higher highs, higher lows.
higher highs, higher lows. So in the structure, you got higher high. This is still a high. And then once it's broken, right, this creates it a higher high, right? So we broke through it. And in structure, we know that in the uptrend, once a higher high is broken, right, the market usually, most of the time, come back and retests that higher high.
All right.
And then what happened after that? It pushes breaking this higher high if it wants to continue to be in a uptrend, right?
All right.
And now we just broke through this higher high. And once we break through it, what we do now, we come back, retest it most of the times, and then we push higher, right?
Mm-hmm.
What I start to do is understand that whenever you are pushing from, that higher high, higher low, and it breaking structure and it stops somewhere up here, right?
Okay.
Something will stop it, and then it comes back and retrace. Usually every single time, bro, how I use my Fibonacci is I start from the bullish and I wait until they show me bearish. So once I got my bullish, I'm riding it until I start seeing bearish momentum. And when I start seeing bearish momentum and it's pulling back, which is where I want to enter, I always enter at the 50 or the 60, 61.8, right? So usually I get in right here, and usually I don't experience no drawdown at all, and it goes straight into profit. And if its structure is holding, it should break past this, lower, higher high. And up here will be the 27 extension is where I want to get out the market, right? Boom.
Okay.
It's the same stuff over and over. And then once it break through this higher high, I can take it from here. And sometimes most of the time it will give you a wick at the 50. And that's where I want to be, and I'm taking it back up. So I want to show you structure first. But another thing is, if we just broke through the higher high, right? Created a new higher high, went back to retest this higher high, right? And now we pushing up and it doesn't break through this higher high.
Mm-hmm.
Let me highlight it.
That's pretty much creating a double top.
Yeah, because that to me, that tells me that momentum is getting weak. Do I sell it? No. But if it comes back and it doesn't pass through this last higher high and it creates this double top, right? And then usually after they do something like that, it will come back and break below that previous higher high. Like it break below.
Right.
And then once it break below, this is when I want to start pulling out my fib, because really, honestly, this is just a trend line getting broken. When it comes back and it breaks below, when it breaks below a last higher high, basically that's the trend line that's about to get broke. You feel me? So right now, when it comes back below this higher high and it pushes through like that, to me, that's an indicator that now this uptrend is becoming weak. When it gave me double top, that was my first indicator that this, uptrend is becoming weak, because now it couldn't even push past the last higher high. And then it broke below this higher high, right? So now I know for sure this uptrend is starting to, become weak. So once it pulled all the way down, I got both my indicators is breaking this trend line, got a double top, and it broke below this higher high. Now what I want to do is wait for a pullback. Wait for a pullback to the 50. Wait for a pullback inside the 50. I don't want to take a trade unless I am inside the 50 or the 61.8. This area in between the 50 or the 61.8, right?
Okay.
Once it pulled back, I know it's a better chance of me taking a sell there versus, trying to take a sell down here. Where the market always pull back, bro. And the pullbacks is where we want to enter. So when the market is pulling back to the 50 after breaking trend and breaking below the higher high and giving me a double top, I know for sure I can take this sell, or my risk to reward, my entry will be inside of here. And my stop loss can be, just a couple pips above this last, double high. And what I want to do is take the sell when structure is broken, and now I can just ride this downtrend as it waves. Now I'm just rolling in profit, and nothing is telling me to get out, because usually it start a new wave going down, right?
Okay.
Now you understand this, like what I'm saying? I want to show you.
Yeah. I'm just okay. So, I'm sure you're gonna show me how you use a fibs. Are you using a fibs on a higher time frame, or are you using it on the lower time frame?
Like I can show you either on higher time frame or on lower time frame. All I want you to see is structure first, because structure doesn't change.
Okay.
Structure never changes inside the market at all. So like right here, what do we see? Matter of fact, let's start. We can start right here at the end of this day. So right here, what do we see?
So I've seen it creating. Yep.
And now we know this area, right? Matter of fact, like we can start and say that the market stopped right in this area, right? So, and what I do, I gotta see bullish, and in order for me to draw my candlestick, I gotta see bullish going up, and in order for me to like set it, I need to see bearish going down. So you could have put it on this first bearish going down. When we put it on this first bearish going down, did we get to the 50? Not really. And what I'd like to do is highlight it so I can stay disciplined and say, okay, when we get to this 50, then I want to, start looking to take a trade. If we ain't get to the 50, I don't want to take it. So after it pushed down, it started going back up, right? And all I'm doing is going up. Why though? Why am I looking for buys? Because look to the left of it. This is completely a downtrend. Lower low,
Right.
lower high, lower low, lower high, lower low, lower high, lower low. And then it broke through this last lower low. This
Right.
low right here was broken. Boom, it broke through sky high, riding, like took off. So now I know that this is the bullish momentum that is giving me. I got to wait for my bearish for a pullback. So now when I put it on this first one, it didn't get to my 50. So I don't take a trade. Now it, like the market stopped up here. So now I put it up here and I highlight my 50 zone. And now look, market came where? Pull back all the way back to my 50, right? So boom, I take the buy. And now on US30, I use a 0.10, just 1.10, that's $350, $400. About $5,000, you know, going through the day. That's how I trade, bro. And that's what I teach like my students. And then structure doesn't change. Like I want you to see structure. Look. So look, we took a trade out here at the 50. Now we most likely know that this is a change of trend. This is now an uptrend, right?
Mm-hmm.
And an uptrend, we doing what? Creating
Higher highs,
higher
higher
highs.
lows.
Came here, came down, came here, like bounced around. This is a 1 minute chart. Then it started breaking, came back, retested, pushing up higher. And now once this trend start to break, right? I now know this is just a bullish momentum. And for me, like I said, I need to see what? Bullish. And I need to see bearish. This is just the uptrend, right?
Mm-hmm.
And now that it's giving me a downtrend overall, where do I look to take my trades?
50 and 61.
50 or 61.8.
Mm-hmm.
So once it's pulling back, that's what I want to see. Why? Because this is now going up. I believe this is now the uptrend. We got the trend line break. If you want to look at structure, this last higher high was broken. So if you want to like look at this last higher high, what happened right here? Broke.
Mm-hmm.
And when it broke, it never came back to the 50. So I know this is just going to be one bearish movement. And I don't want to take a trade until we get back inside my area. Let me delete this one because I want to teach you structure. So up here, like right here was the last higher high. And then what? Broke the trend line. And when it breaks the trend line, I need to see what. So I started on that bearish movement going down. It gave me what? Bullish going back up, right? Bearish going down. Bullish came back up to retest what area?
50.
The 50 every single time, bro.
Yeah, can you hear me?
Huh?
Can you hear me?
Yeah.
Okay. All right.
So now look, hit the 50 mark. And shit, let me see. Hit the 50 mark, and where did it drop? Because now, look, the way if you draw your fib up this most every time, bro, it comes from experience, bro. I learned through experience. If you use bullish and bear and not, we always talk, especially in Q course, the highest and the lowest. Don't do that.
Mm-hmm.
Wait for bearish to give you a pullback. Wait for bullish to give you a pullback. We know that we got bull, right? Breaking all this structure, these lower lows. And another thing, we always talk, look at lower highs and lower lows. Forget all that, bro. Look at lower lows and higher highs. That's what's going to change the game. When a lower lows, lower lows and higher highs. So like, look to the left. When this lower low right here, especially this lower low, when it all got broken, I now know that the market gave me bullish. Now I'm just waiting for a bearish candle. And when we got that bearish, where did it come back and retest? The 50 to 61.8 area. And that's when we want to get in our entry because this is basically a good pullback before we ride it back up. Structure was already broken. Right here, it was going, now look, we was going all the way up, uptrend, uptrend, uptrend. Really, these higher highs was never truly broken. It was just an uptrend going up. That's my bullish momentum. And then look, structure, even right here on the baby structure, it broke on this line going down, right? And when structure is broken, when this higher high is now broken, when this higher high right here was broken, we know that it gave us bearish. Look at the candlesticks. It gave us bearish, right? So we can got our fib ready. We just waiting on bullish to show me bullish, right? Show me some bullish pressure. Where did it go? To the 50. Now I know it's a good chance that I can take this trade here. Inside there, drawdown, if I'm using just a 0.10, drawdown is no more than $5. Stop loss can be just above here, and not willing to risk a lot now. My risk to reward is great because now, if I'm using a 0.10, my stop loss is at $100, and I'm looking for the
on this situation. Where would you put your stop loss?
Bro,
Above.
It depends on how much you got in your account, and it depends on how much you're willing to lose. If I take this trade, if I'm on my account, I'm willing to lose at least $1,000. If I got $5,000 or $6,000 in my account, and I'm paying attention to structure, because this happens over and over. I'm gonna show you in a higher time frame. It's happening over and over again. A lot of people just don't know about it. So like, if I take that trade, take the trade right here, I'm willing to risk. Like I said, I use 0.10s, which is easy math. You basically take out that 0, and now it's $175 that I'm risking. So I'm really, let's just say instead of 1,000, let's just say 500, because these entries are so, like, they so good, bro.
Right.
So like my stop loss would be somewhere up here for $450, right? But what drawdown was I in? Because I waited on structure. It gave me bearish. Now I got bullish. Now I know it's a good chance this is the pullback. I can take it. And when I take it, I can ride it down. And when I take this trade right here, why be greedy?
Right.
It's giving me 200, 300 pips. On a 0.10, that's $300. Like I tell my students, $500 a day is $2,500 a week, which is 10 bands a month. You can make that $500 a day. This is the 1 minute chart, structure in the 1 minute. So if we take this trade right here and we get out, because we know that it gave us bullish, we know we're getting bearish, and we should be looking for a buy here at the next 50. If you stay in structure, bro, you're gonna make you a little cool. Feel me? Take the trade right here, get out somewhere down here. That's a quick $300, less than what? 10 minutes.
Right.
You out. Get out.
So let me ask you, okay.
Yeah.
Okay. So would you just keep your fibs on? Because I see that you went from the first bullish where it wicked originally, and you just continue to move it up.
Right over here.
Yeah. So you just continue to readjust until
Structure was broken. Yeah.
You keep taking buys every time it hits 50 to 61.
Yeah, you can do it that way, or you can wait for the overall move to break. So like, say for instance, I see it break this lower low, so now I'm just prepared for it to show me bearish. I put it up here. It didn't get to my 50, so I'm not taking the trade. Then I put it up here, and now look, I'm just highlighting my zones too.
Yeah.
Now they hit the 50. Boom, now I know I can take this buy, and I can ride this buy until what? My higher highs get broken, like higher high right here. And then remember, the higher high on the 1 minute can be sometimes just an area. It can have consolidate sometimes. So now I'm riding this, and bro, sometimes you take the trade here. Why be greedy? You can be getting out once it's giving you $400, and just look for the next setup. It's happening over and over. But like, say for instance, let me see if it worked this time. So now it gave us a gap. Yeah. It gave us a gap because it's a market finna close right now. But now we got bearish, bullish, because it gave me a bullish candle. Where did it go? Inside our 50, 61.8 area. You take another buy and just ride it. And now look, bearish breaking through this higher high. Bearish, you can put it on this first bullish, but when we put it up there, did it hit our 50? No, keep moving. Now it starts showing us, bullish momentum. Where do we take the trade? Inside the 50. But at the end of the day, this market is finna close. So you like, I would have been looking to get out all my trades regardless of what I'm in. And now,
Right.
and then now what I'm teaching you, like when we got bearish momentum, if we got bullish momentum, we need to see what before we can draw up our 50.
Bears.
We need to see bearish. So now look at this structure as one movement. So now it's just a complete uptrend. Structure is breaking higher highs, coming back and retesting higher highs, and then pushing off, because that's how an uptrend works. Like I showed you, it goes up, it comes down, and then it breaks the higher high. And then what it do? Come back down to retest the higher high. And then it just stays in trend. So now we know this is clearly an uptrend, right? And before we can sell an uptrend, I mean, when we got our uptrend, we need to see what before we can really take a another entry for a buy. We need to see bearish momentum, because we got one big uptrend. Now we are starting to get what? A downtrend, right? This was the lower low. Look, lower low, pushed up lower high, lower low. And when we came back to that second lower low, because counter trends are very strong, because they push hard, like hard, they don't really trend, they just come back for a pullback. Where do we take our trade? Inside this 50.
Gotcha.
50 to 61.8 area. And then where do we take to the 27 extension? You see how I smacked the 27 extension? Boom. If you're using a 0.10 at $700, get out. The more you compound your account, the more you can be like you, and later on take that one standard lot on US30, and now you're making $7,000. You feel me? Instead of taking a 0.10, you can make $1,000 in less than probably an hour or so.
Right.
Now we're taking. I just want you to see structure though. Structure doesn't change no matter what time frame. A lot of new traders, a lot of things that pro traders or James or Q, they all understand this, but they're teaching it on higher levels because their accounts are big. And structure on higher levels is sometimes difficult unless you practice and you've been deep in the charts, you won't really truly understand it. So now we got a double bottom, right? And we're starting to get our first bullish momentum going up. We got bullish. We need what? Bearish in order to draw up a fit. Did it get to our 50? No.
No.
Same here. Did it get to our 50? Not really. It came down here and didn't get to our 50. Let it ride. Then we started getting up here, right? And when we start pushing down with bearish, when do we want to enter the trade? It was quick. It was quick. Push down. None of this bearish moment didn't get to my 50. This one didn't really get to my 50. It came close, but I don't trust that. Then it came all the way up. Bro, this is how you save your money. This keeps you from taking bad trades. Because even if you would have tried to take, a buy right here, you would have came back and been back in drawdown. But wait, it hit the 50. Showed me bearish momentum up here. I put it up there. When it pulled back, did it get to my 50? Yes. Or we saw at the 50, take it. Boom. This could have been another entry based off that entry down here. Remember, we took it at this overall movement, took it at this 50 down here. Now we starting to see smaller structure. We could have took another buy. Boom. Right. Now we taking it. You could exit that trade, once you get to the 27, or you can hold it for the overall movement. So now we push at a 50.
Quick question.
Yeah.
So are you entering when the candle closes? Are you entering?
No. I'm entering as it gets to my 50, bro. If you enter when it closes, it's not a good chance, but because it's the 1 minute. But as it's coming in my 50, right? I'd rather enter right here and take the risk, because my stop loss can be right there, right? Compared to, taking it right here, that's already 38 pips. I mean, whatever pips. I don't want to wait for it to close, because sometimes it will wick down and then take off. So I want the best entry. So the more closer I could get to the 50 or the 61.8, the less drawdown I can worry about. Sometimes it will come down at the 50, wick, and then come back and retest. And some people wait for the, like some people will wait on this bullish movement. Like right here, like say for instance, this was the 50, it hit, they didn't take the trade because they wanted to see what? Bullish going back up.
Bullish. Yeah, that's how I normally would enter.
Yeah, they'll wait on this candle, think they going up, and then look, be back in drawdown, you know, another $100. Why go through that, bro? Just take the trade around the 50. Now I know my risk reward is less. Even if it goes the opposite way, I can now get out, because if it's going past the 50 or the 61.8, that means structure's finna break anyway. So my stop loss can be right up under where I took my trade at if I take it inside the 50 or 60. You feel me?
Gotcha.
But look, structure.
And then,
so
now, question, like,
yo,
go ahead.
What you saying?
No, I was saying, so when, let's say, go over how you exit again. Are you still using the 27?
Mm-hmm.
So if you draw it up,
bro,
draw up your fibs how you had it
from the bottom of here.
From the bottom there, yeah.
So
from there.
Right here, because this is the break. This is the break of that high. So from here, we try to use this one, but it didn't get to the 50. So now let's push them back up. We cool. Stop right here. When it starts showing me bearish momentum.
You enter there.
Yeah. You can enter here, bro. Like I'm starting to show my students, higher time frame don't even matter no more, bro. If you cannot be greedy, take the 50 and get out at the 27 extension, that's still a $263 day. And you can do this all day.
Right. And I mean, you just fucking increase your lot size.
Is it, bro? If you use a point,
same thing, you good.
Bro, if you use a 0.5, that's $1,000, $1,300 and what, 20 some dollars.
Yeah.
And then the more you compound your account, you could be taking a one standard lot.
Right.
Or
I'm definitely like a risk taker. So
yeah.
Fucking, you know, I was trading, you know, $10, but that's how I was catching. You know, I had some good days, but then like I said, I lost the shit. You know, like I'll be hitting like, oh shit.
Yeah.
Account growing and boom, blow it off. Bro,
that's me. That's how I learn, bro. Like I like to take my risk, bro. I'm like when I used to trade Forex pairs, I'm stacking. I was stacking without having a true good strategy. I'm stacking 10 standard lots 3 or 4 times with just, you know, $2,000, $3,000 in my account. I'm looking, I was coming up, bro. Like I said, I blew $68,000 in 2 months. So believe me, bro, I know. And what that did was cause me to go deep into the charts, like figuring out why I was losing. And what it came down to is that I was missing structure and pullbacks. The market is always making uptrend, up higher highs, higher lows, higher highs, higher lows. So now I know structure. So even like right here, like, you know, you asked me about that, took it out here. You could have got out at the 27 extension, right? But also you should be confident when understanding this overall movement, because now we have an impulsive bullish. Now we got our bearish. We take our trade at the 50 and we get out where? At the 27. So even if I took the second entry right here, I can still ride it. Now I'm deep. You know, when you talk about scaling in, that's a scale in. That's a scale in for the overall goal of the 27 extension.
Gotcha.
Structure doesn't change. So we got in the entry, start showing me some bullish momentum right here. We got bearish. We got bearish momentum. Did it come to the 50? No.
Yeah.
It started pushing back. Like right here. When it pushed off here, did it come to the 50? No, it started pushing up. We still got this trend line up here because it never gave me another bearish momentum above. Then look, it gave me a bearish momentum above, right? Now, did it get back to the 50? Smacked it dead in the chest, bro. Now we know we can take a possible another entry. And why? Because we're confident that it's going to get to our overall movement of the 27 extension. Boom. Took it where? You could take it to 27 extension, or we already know that the overall 27 extension is right here. Just making money, bro, because we were being patient, waiting for bullish It gave us bullish. We waiting for what? Bearish
There's,
to come back and give us a what? Retracement to get to our overall goal. Now,
okay, so you pretty much, you're not even waiting for it to come into like higher time frame,
bro,
exhaustion area. You don't, you can take it in the
exactly.
middle.
Bro, structure is
Oh, shit.
structure. A lot of students don't know that usually when it start happening on a 1 minute and 5 minute, it makes the 4 hour.
Yeah, it makes it 4 hours. Yeah, exactly.
But strategy, like people say, is my strategy. It's really not my strategy. This is market structure. Market structure is making higher highs, higher lows, break through the higher high, and usually come back. But like if it's a strong higher uptrend, it's gonna push way up, make a higher low. But this higher low is nothing but a 50% retracement every single time. But people don't know that because they try to take, sales and stuff right here, and then they start pushing up, and now they're trying to take a buy up here, and now they start pushing down. But when we could be patient and let this, we try to put it here, did it get to the 50? No. Put it here, no. Put it up here, did it get to the 50? Now we know we can take this trade at the 50 and keep in trend of this overall uptrend, right? And we know from structure that it's creating higher highs, higher lows, higher high, higher low, higher high, right here, higher low, the retest is higher high, and then what happened? Broke through our last, broke through, and like I like how you use, like I use the line chart. Right here was that last higher high area. This right here, this area right there was a high. So look, it broke through this higher high area, came back, retested this higher high area, broke through this, created a new higher high area. And then what happened? Broke structure of what? This overall uptrend.
Okay, yeah.
You can use trend lines to stay with the trend. Use trend lines to stay with it. Now look, this higher high right here was broken. This higher high even was broken. But instead of just trying to sell it as it's breaking, which a lot of traders would do on higher time frames, they get their money snatched because it pulls back. But for us, we know that we just broke structure. So now what can we do? Start from the bearish momentum. And what do we need to see before we can take a buy?
It has to come to the 50.
Yeah.
50 or 60. Yeah.
It gave us, but look, what did they give us though? It gave us what? Bearish momentum.
Bearish, bullish. Yeah.
Now we have to wait on what? Bullish to get to where our 50. And like you can, like sometimes I don't like using dojis for that reason, bro. Doji is too indecisive. I need to see, like, I mean, you can start on it, but like sometimes I like to see like full out candles. It don't matter, regardless, it's just a 1 minute chart. You feel me? So even, let me see. So let's just say we start from the top. We got some bullish momentum right here. Where do we take our trade?
Right in that area.
50 to 61.8. Would have been in drawdown. So you take it inside of here. Would have been in drawdown, what, $25? But look at the reward. Look at the reward though. All because we waited on structure. When structure was broken, it gave us bearish. We was waiting for some bullish momentum to get a good pullback. And if you know structure, where did it go? It just went to that last higher high. I mean, this last higher high that was broken, it went back to retest it. Went back to retest it. Boom.
So with the sales, let me ask you something. With the sales, so if you move, you can keep that fib real quick. Keep the fib.
Yeah.
Where you had it from the sale. The sale. Yeah. Okay. So every push that it makes, you're gonna go move it down to the next bullish.
Every move that it makes. I mean, I wouldn't really do that, but I can if I wanted to see the overall move. Like, so like now.
Because I'm trying to see how you can stay in the trade and kind of know, hey, it's passing.
You can do, so say for instance, we take the sell, you can get out right here, or you can just wait for structure to get broken because now this is a lower low area. All this right here is a lower low area. So now we already looking for the market, you know, to switch. Now it's a lower low area. It's pushing down. Structure ain't really breaking, you know, until we start to get like somewhere around here, it's starting to come back. But also, I want you to see, I want to show you another thing that I just learned, bro.
So as soon as you see the break, you can.
Yeah, like a double bottom or break like something like this double bottom, and then it start to break above. Now I know I can, you know, be looking to get out. But look, I want to show you something else, bro, that I just figured out. Have you heard about the Heikin Ashi?
I've heard of it.
Let me see if I can find that. Now, bro, I just figured this out because I used to try to trade like this. And what this do is help me stay focused, stay locked in. So now look at this, Heikin Ashi. All it is showing you the momentum of candlesticks. I'm not sure if you can see the difference, but you see the candlesticks, the blue pop up. So now when I take this sell up here, right? My Heikin, even though it's giving me blue candlesticks, what is my Heikin Ashi showing me? Red still.
Red.
Gave me a little bit of white. You know, that's what I would have been like nervous to get out, but usually you gotta like wait for 2 whites before I get out. If you're using this strategy, wait for like 2 whites before getting out, because we don't really want to see a pullback. The Heikin Ashi shows you the momentum of the people, the bigger banks who are entering the market. This momentum is pushing, and usually as you see the Heikin Ashi, when I scale out, look, it shows you the momentum of trades, the trend, basically showing you the trend. So when it's a downtrend, it is a downtrend. Even though, you know, we might see, you know, opposite candlesticks, you see these blues going up for retracements. But when it's a downtrend, it is a complete downtrend. And then when it's starting to show me uptrend, it starts turning white, because now the momentum for white is starting to, I don't know if you know about like volume, they usually be at the bottom. They know the volume of every single dollar that's getting in. So when the Heikin Ashi start pushing back up, you know, if I'm in on a sell and they start pushing back up, I can low key be looking to get out and say that's a good day. You know, take the sell up here, 50% retracement from here, boom. Now I can ride it all the way down for 5,000 pips. And then once it's starting to show me 2 whites, I can be looking to get out. Or I can wait on structure, probably a retest here. But why even wait? Take that bread. And when it retests, get back in if you believe it's still going to be a downtrend. But like you see, this is just one movement down for 10,000 pips. When it's showing white, it's white. Like, boom. We take the trade where inside our 5618 area. Now look, boom. We riding. Show me a little bit of red. You know, I ain't really nervous because it's starting to, you know, come back. And I think it's going to pass. This is why structure is important too. That's why I wanted to show you structure before I showed you this. I'm already looking for it to pass this lower low. Why? Because we just broke through this higher high. So now I know this is going to be an uptrend for real. I'm already in the trade at my 50, 61.8. Riding. Even though some of these candlesticks are showing me red, I'm still staying in. Why? Because my Heikin Ashi is showing me that. Boom. Now I'm starting to see some, you know, push down on momentum with these reds. So now I could be looking to get out. Boom. I'm out. Boom. Why be greedy? Don't be greedy. Get out. Take your bread. Get out. Look for the next setup.
Okay.
This one didn't get to the 50. So we're not even, you know, we're not even trying to trade it. Now, you know, still didn't get to the 50. Now we came back to the 50, right? Take a buy, started pushing up. But honestly, I know I can take this buy, but I know this buy is going to basically going back to, because structure was already starting to break. Like it made a double high, right?
Yep.
So now I know I can take this buy back to my 50% area to look for another sell. This is how you catch the uptrend, downtrend, counter trend, everything. Like when Q catch both up and down when overall was down, this is out because he understands structure, but he does it on a higher time frame. So now I know that we never got to the 50 after putting it here, not put it there, and then we pushed up here. I know I could be looking for a buy, take the buy inside that area and be getting out soon. Why? Because it gave me a double top. When it gave me a double top and it started break, structure, it broke below, even this higher low. It broke structure right here. And when it breaks structure, it gave us bearish. What do we need? Some bullish momentum. Bullish momentum going up. And where do we take a trade?
The 50 to 61.
50, 61.8. And we're TP, 27 extension. Why be greedy? Get out, 27 extension. Or with this Heikin Ashi, nothing is giving me white. Giving me a little bit of white right here, but it's still pushing down. It's not giving me white. And now I can start looking to get out for another 5,000 pips. But I knew that this buy wasn't going to be as strong. Why? Because it gave me a double top and structure was broken on the second leg down. Now I know.
Can't you just use a trend line? Because I see how you're using the trend line to the upside, and when it breaks, well, not because then you're giving money back. Yeah, never mind.
What was that?
No, I was just thinking out loud because I'm looking at how you're using the trend line, and when it breaks, that's when you're looking for your sales. I'm like, hey, you're giving too much money back if you wait for that.
Yeah.
Get out at 27 and. Okay.
I'm gonna turn the Heikin Ashi off real quick though, because I want you to continue to see structure first. Now, Heikin Ashi is not really the strategy; it just helps with confirmation, like I said in the text. Now I know, you feel me, when to confirmation. We all like confirmation, so now I know when to get out, even though it's giving me bullish candlesticks. Heikin Ashi is still telling me that it's selling momentum.
Okay.
Look,
so you're not even really concerned with too much with the candlestick patterns and nothing like that.
No, bro. I mean, don't get me wrong. This is right here is a candlestick pattern, but I don't care about that. Structure is important. Candlestick's pattern came from some guy who sat there and looked at candlesticks so long, and he now created some pattern. I don't care about pattern, bro. I care about structure. What is structure telling me? Pattern is a confirmation to hold trades. Structure, when it goes up and it's giving me, if it giving me bull and now I'm looking for bear, I'd rather do this all day. And don't get me wrong, patterns are good because now, if I take the buy right here and it's going up and down like this, I should already know, I forget which pattern this is, but it's like something right there. And it's when you got, it's like an ascending triangle or something like that.
Yeah, triangle, yeah.
I don't even triangle. Yeah. So like I can be confident because I know candlestick pattern, but I don't care about candlesticks pattern, bro. I'm taking my buy at the 50. My stop loss can be right there if I wanted to, because it shouldn't push past the 60, or I can put it halfway, or I can just put it below this last low for $61. Regardless, I'm not blowing an account, right? Because now I waited on the back, and my TP can be right here. And when you do this on higher time frames, which James Storm and whoever Q them, like professional, traders, they do this stuff on higher time frames. So when they hit the 27 extension, now it's for $29,000 instead of $2,900. Basically, let's look at it. I want to show you. Structure doesn't change no matter what time frame you're on. Let's go. But structure on a higher time frame just takes so long. That's why Q trade 2 weeks out of a month. Why? Because you have to wait on a move to happen. Even let's start up here. So we got bearish going down on his first bullish, right? Bullish going back up, but it took a trade where 50 area as it's going up. And remember, this 4 hours, so it takes a long time. Then it breaks through what? This lower low. So now we know this can be an overall downtrend. And now we know that once this trend line is broken, which is broken right here, now it's giving me bullish, it's giving me bearish. Now it's giving me bullish. Where do we take the trade?
50 to 60.
50, 60, 18. But I wouldn't take it just because it's on the 4 hour. I teach my students how to scale down to the 1 minute, right?
Right.
I don't want to scale. I don't want to go all the way back to the 1 minute. But on the 1 minute, it's still giving me an uptrend, right? I want to wait till this uptrend get broken. And when it gets broken, I want to pull back, which is why this gave us a wick back to the 50-61.818 area. And now look, it's pushing. I teach my students, I'm gonna send you a link where I was teaching, you know, the niggas who was calling me like a scammer when I was trying to like show them another way of trading, you know. And also, even if you don't know, like if you don't even trust, like even if you don't trust you know, the stuff that I'm teaching right now, look at structure, bro. It pulled down. Even if you just want to trade off based off the line chart, pull down, what? Pull back up. We know in structure, it breaks through the lower low, right? And where do it goes and retest? The lower low.
Right.
But what a lot of students who don't know that, when they see this market pushing down, they like, oh shit, let me get in on the sale. It's already pushing. Let me not miss it. Then they get their money snatched on this bull, right? Then they like, oh shit, let me just go ahead and take the buy. And they take it late somewhere inside this wick, thinking it's going to just go back to retest. Then what happened? Pull back. Now they got their money snatched again. Now they like, okay, even if they smart enough to know the line chart, they like, okay, this is just a lower high, right? Let me just go ahead and sell this market. You know, and on this, they said this is a lower high, right? So they like, okay, once we break through this low, I'm gonna take a sell. So they take the sell down here, and look what happened. Money snatched again. They like, all right, bro, you feel me? Let me just, you know, I don't even know. So they probably try to, you know, try to buy the market as it's going up. And you see what it did. It went up, but then it went back down and took their money again. But all I'm saying is when a lower low is broken, wait on a pullback, bro. Wait on this pullback. No matter how long it takes. This is why I don't trade the higher time frame and look at the higher time frame analysis, because of experience, because it takes a long 4 hour, 8 hours, 12 hours, 16 hours, you know, 20 hours, 24 hours before it actually comes back and pull. But QNM, pro traders who have big accounts, they wait because they don't want to be on the charts every single, but they make millions of dollars, thousands of dollars. They don't care about taking trades every day. They rather just wait on a clean setup and take that and then stack on that and make, you know, 50 grand at the least on one trade.
Yeah.
They just want to
make. They made 200 something the other day.
Yeah, bro, exactly. That's the only trade he needs to trade this whole week. But it was a clean setup. I can show you that one as well. But like, just wait.
Yeah, no, I took that, you know what? I caught that setup.
Yeah,
I got out. I got out early.
Mm-hmm.
You know what I'm saying? Well, not early. I mean, I still caught my 3 to 1.
Yeah.
To hit my TP. You know what I'm saying? But that shit kept going.
Yeah, bro. I'll show you.
I got the same shit.
I'll show you. But yeah. So pull back to the lower low. I teach my trader, like, students, wait for this pullback, take it, get out. But like even this pullback with the other strategy that I was just showing you, with everything comes back to the 50. But you got to be careful too. On higher time frames, it can give you wicks above. That's why we go to the 1 minute to see structure on the 1 minute, because as it's pushing bullish, I don't want to take a sell. Another thing I teach, bro, if you want to take a sell, right, based off higher time frames, don't sell while showing you bullish momentum. That's gambling. That you taking a stupid ass risk at that point. Like, wait for some momentum to show you bearish and hop in that trend. Because this bullish right here, if you go to the 1 minute, bro, it's going higher highs, higher low, higher highs, higher low, higher highs, higher low. Why would I want to sell against a trend that's showing me higher highs and higher lows? Wait for the higher highs and higher lows to break, because I'm pretty sure once it broke up here, it pulled down, then it pulled back up. And when it pulled back up, you see it probably went past that 50 area, but even it made double top. You know, sometimes it'll give you double top. Like even when it came back down up under that double top, you remember I showed you before we got on, gave us a double top. It will break below one of these higher highs that it was making in this uptrend. push off the higher high, come back and retest the 50. That's when we want to take a trade. And now we're riding it down. Don't sell against a bullish trend, bro, or a candlestick on higher time frames.
I know you probably don't care about win percentage, but do you have a high win rate?
I
Like this?
don't care, bro. I don't even keep up with it, bro, at this point. Like
Yeah.
I win a lot of trades, and don't get me wrong, I lose some trades too. Why? Because of my own greediness and my own, I don't use stop losses sometimes. Like, don't do what I do though, bro. Like, sometimes I'll be so overly confident that the market's just gonna flow. And instead of like taking profit, and I did this week, like the other day, when I see like $5,000-$6,000, I won't take it. And now the market will end up, reversing, or I went to the bathroom or take a shower and miss out on that money. Now I'm losing, or it ain't even losing, because once I take a sell, or let's say once I take a buy, right? Say on this, I take the buy, and once it started to push, let's just use this one. So I take the buy right here, and once it starts to push, right, I will put my stop loss right above my buy on a 1 minute. And now it's pushing in profit for a hella pips. And then I have something like I go to the bathroom and just put my TP up here, and then it'll come back, smack my TP. I mean, you feel me? My stop loss, which is which is basically still break even. And then it would actually sometimes push in a direction. So sometimes I don't use a stop loss, or I usually just be on the charts, bro. I'm always on the charts, bro. It's never a time that I'm not on the charts. So most of the time when I place a trade or buy, I'm just watching it. And I know if it start pulling back and drawdown, I'm getting out. I don't want to lose too much. But now, like with me, sometimes I take a buy and just put my break even right there, TP up here. And if it hit, it hit. If it don't, it just break me even and I'm out. Because even like the entries on a 1 minute it's so perfect, bro, that you really, but like, why be greedy? If I take a buy right here and it's giving me, 5,000, it's a perfect example, $5,000, $6,000, take that, bro. The market goes up and down all day. Take this, and when it comes back again, take it again. Take that. Take that bread, bro. Don't give them back shit. Like, take that bread. $6,000, I would be watching like, okay, my TPE up here though. You feel me? But then it pulled back, hit my break even, and now it took me out and didn't actually go. I'm like, damn, I didn't lose nothing, but like, damn, I could have just took the 6, came right back, took another 6. That's 12 wins in a day. But I'm learning, bro. Like, we all, I mean, you don't win every trade, but like, bro, what I'm learning is sometimes don't be greedy. And on higher time frames, I don't really like messing with it because it just takes too long to retrace. But look, what do we see? Full out downtrend, right? In order to draw our fib, we need to see downtrend and what? Uptrend. So this is one big move. If you go to the weekly, this is one solid sell candle. Started up here, ended down, up here. It's a selling candle. So boom, we started getting some bullish right here. When this lower low right here was broken, turn on the line chart. This lower low right here was broken right here, and even gave us a candlestick that stayed above, right? So now I know that bullish pressure came from here. So bullish, we got bearish, bullish. Where do we take our trade?
50 to 61.
Boom. So now I can just wait this whole week as it's making its moves. And even right here, I can take a trade, put my stop loss up there. But like, why just wait on it? You feel me? And then once it get up here, where we take it to the 27, this is what like QNM wait. They wait on like setups from H4 and catch the overall big, because structure is structure, bro, no matter what time frame. But they just catch this overall move for hella pips.
Right.
47,000. That's what, and he put a 3 standard lot on there. That's $50,000. That's $150,000 on just that one move. You feel me? People gonna take this setup every day, but for us, bro, who has smaller accounts, we can take this setup. But like, bro, if we have smaller accounts, we not trying to be holding a trade, that long. 4 hours. I ain't even gonna count it. This is 4-hour candlesticks. That's over a day for sure. TP, it even pulled back. We would have been nervous and got out because we thinking it's gonna go up. But look, it smacked. But somebody with a bigger account can take, and they don't even have to really wait on structure. They could have took the sell right here. Like I said, Q, take the sell right there when it first got inside the 50. Now, you know, he risked 20K, 30K. That's not even 20K. That's $10,000 still. I mean, it was never hit. $10,000 still never hit, but he had put his stop loss at 20K, which is up here. You feel me?
Right.
Because he has a big account. Was it hit? No. Was it a good sell? Yes. Why? Because it went, if you took it right here, even though it pulled back and draw down for 6,000, it still hit TP for 45,000 pips. He's doing the same thing, but he's doing it on a higher time frame, bro. He understands structure on a higher time. For me, it's just, I can understand it, but it just takes too long. That's why I just look at structure on an M1. It's the same stuff going on. You might get some consolidation like this. This is ugly, but like when the market is flowing, it's flowing.
Mm-hmm.
This is probably bad because it's probably the start of a new day, bro. You already know not to trade within that first hour of the day, right? There's a lot of even that last hour, I had somebody hold a trade trying to go through and it was on a Forex period. On a Forex period, the spreads open up a lot during that 5 o'clock. So like, don't hold that, bro.
So what time do you normally get in the trade? Like after like 8? Well, I'm on the West Coast. You on the East Coast?
Yeah, I'm on the East Coast.
Okay.
Yeah, but when I'm trading US30, I try to get on the charts at 7 o'clock in the morning. I wake up 7 o'clock. I'm trying to get on the charts. 1 minute chart pushed all the way up. Came back to our 50 area. Yes, if we took it here, we would have been in drawdown. But then look at the reward. The same stuff happening over and over. Structure is structure, bro. Like, trust it. Even like sometimes be careful. You feel me? Because it broke below this lower low, right? Broke below it. You would have had it right here. Because it started giving you bullish. This is a good trade too. So it broke below this lower low, which tells me what? That this uptrend is becoming weak. Broke below it, gave me bullish, started from that bullish push. Gave me bearish, started from that bearish push, gave me bullish. Where do we take a trade? At the 50 or 60? Smack dead on the 50. Usually when I'm on a 1 minute, I take that trade at the 50. As it hit my 50, I take it. Even if it continue to push up. Because even if it continue to push up, that's only $21, $15, $19 that I'm losing. 21, even if it push some, up here, that's still only $40. But look at the take it at the 50 every single time. And then even if it start to push back up on some stuff like this, like if it start pushing back, like you can start getting out, bro, because it's supposed to fall. Trust yourself. It's supposed to fall from this 50. Everything I'm teaching you, bro, is supposed to fall from the 60 to 61.8. If it start pushing the 70, I don't even have that 70 stuff that people be talking about. I really don't even need this 23. I don't even know where I got it on. But my 50 and my 61.8 area is all I need. If you start pushing above that, especially start pushing up here, get out the trade. Don't lose your whole account. Because it was an uptrend. Yes, it broke structure, but the market doesn't stay. It's not, if it was one way, bro, we all be millionaires. It can push, news can happen and it spike all the way up there and take you out. Put your stop loss, like I'm telling you, but sometimes I need to do it myself. Put your stop loss at least above the last, higher high.
Yeah, that's high. Yep.
Yeah. Or like I say, I'm willing to lose $500, right? So if I take my trade right here, I'm willing to lose $500, which my stop loss would have been stupid ass high. But like, let's just say I wanted to lose, if I'm using a 0.10, let's just say I wanted to lose 150, right? Just a 1.10. My stop loss is up here. Overall, I'm looking for it to push down. So take the sell right here. Did it pull back? Yes. Pullback just created a double high, right? Because we just seen it on H4, how it gave us a double high. Stop loss didn't get hit. Now look at the reward. We making money. 8,000 some pips. That's a winning trade.
Yeah.
Structure don't change. Now you might get some stuff like this. This is when everybody loses during consolidation, bro. And news happening. This is nothing but news. Look at all these spikes. Pretty sure this is 9:30. 9:30. Yep. On here when I say 16, that's my 9 a.m. Look, 9:30. When the market opens, it does stupid stuff like that. Stay away from that. You don't really want to do that. Give me double high.
Mm-hmm.
Put it right here, bullish. When I push bullish, do we get to the 50? No. Put it right here on this bullish. And put it on this bullish. Do we get to the 50?
Yep.
So where are we taking profit? Because we don't want to be greedy. 27 extension for $4,000 using just using a 1.0. Or if you don't have that type of bread, put a 0.5 on there. That's still half of whatever, or $2,000. Or put a 0.10 on there. I mean, just a point, 0.1. That's still $100 some. Why be greedy? I mean, yeah, you can try to like turn on Heikin Ashi and wait for it to show you, bullish, because I'm pretty sure if you turn it on, it's gonna still show red. This is just something that I just figured out yesterday, honestly, that I can use this. So hit the 27 extension, but structure is maintaining. So I can really just keep riding this. Boom. Keep riding until I start to see some true push up, like somewhere down here, probably. Somewhere down here, I'll probably be looking to get out. But let's look at all these pips, 7,000, 6,000 pips, without even having to look on a higher time frame. I seen uptrend, higher high, higher low, higher high, higher low, higher. Oh, it's not even a higher high. This is my first indicator. And then yeah, if it wanted to continue to be an uptrend, it would have broke through higher high, would have came back and retest, right? Because if it's an uptrend, it would have came back, retest this higher high, and it would have took off. But what do we do? Created double high, which indicates that most likely, usually when you get this double high, it's going to push up under that last, and this just come from experience, bro. It's going to push up under this last higher high. But like, so this move, we wanted to see that move, right? Because we already know that this trend line is going to be getting broken when we see this higher high. Trend line got broken, pushed up under this higher high. Ooh, we licking our chops, bro. Now we starting to see turn back on the candles. I think this was a wick. Let's just say from here. It don't matter. This is 1 minute. It's still close. Heikin Ashi, I'm gonna turn it back off, but you see that momentum is pushing.
Yeah, I see it, yeah.
But now look, from structure, we see that it's came back below this higher high. And now we know that we got bearish. We need to see what bullish. We take our sell somewhere up in that area. Take the sell right here. Stop loss will be, I'm confident because I see double high. Matter of fact, based off of what I want to lose from my account. If I got $1,000 in my account, I'm gonna use 1.10 and I only want to lose $200. So stop loss is right here. Now I only want to, because I got $1,000 in my account, I only want to lose $200. So now I just want to lose, I want to put my stop loss right there in that area. And now if it get hit, it get hit. If it don't, and really, bro, why be greedy? If I got only $1,000 in my account and my risk is, $200, you can do a 1-on-1. So whenever you see $200, you can be looking out. Or you can do a 1 and 2. Whenever you see $400, which is right here, get out. That's the 4 we're looking. That's a 1 and 2. All you really need, bro, to grow an account is a 1 and 2, and it will keep you from being greedy. I mean, if you do a 1 or 2, you're risking $200, you're gaining $400. Get out. That helps you. Most of the time, people be looking for a 1 to 8, and the market pulls back on them because they was looking too greedy. When they got the 1 to 6, 1 to 4 gave into them, they be greedy and get out. Look at this. All you need, if my stop loss is up here, take that 1 or 2. Boom. The more you grow the account, the bigger slots you can take later.
Right. Okay.
I don't even like exposed this thing. Yeah, bro. Take advantage of this, bro. Take
Yeah,
advantage.
see it, man. Yeah, I'm definitely get on the charts, back test it, and play around with it. But I see it.
Yeah, test it,
It
man.
makes
Test
sense.
it. It makes sense. It's easier, simple, bro. A lot of us traders are confused on it. And that's why, I started helping people in the chat. And like, only reason I was charging, bro, is because somebody told me I needed to. So I charged 150. And then another dude was like, bro, you need to start charging more for this content. And you spending hours. I was spending hours on top of hours, bro.
Right.
48 hours of just sitting right here trying to make sure I get this. Usually the call was 2 to 3 hours a day, like one person. And just so I put it at 250 and was like, I'm not gonna go no higher because I just want to see people get paid, see people win, bro. I don't want them to go through the struggles I did. And another thing is, bro, I was showing family members. I get off work at like 4 and be at my family house to like 11 o'clock p.m. hours, setting up broker accounts. They have no clue what trading was. Setting up broker's account, showing them candlesticks, showing them everything. And then they like, bro, I don't even want to trade no more.
Yeah.
I'm like, oh,
Yeah,
hell nah.
Yeah, man. You sound like me, man. It's like if you learn something, you want to take it back to the village. You know what I'm saying? You want to see other people win. So,
bro, that's all I
definitely
was
gonna be blessed
on.
for that, though.
Yeah, bro. Like I said, nigga, I make money, bro. Like, dude calling me a scammer. I charge because my time and like even after this, bro, like you pay me, you have access to me. Send me screenshots, send me recordings, send me the opposite of what James was doing. You can do that with me, bro. And I'm not charging you $5,000. Send me your screenshots, send me your analysis, send me whatever you need to. And if you truly don't understand, I'm gonna send you this link to hit me up after this. I'm gonna send you a link with like 8 to 10 other videos of me being on calls with other students, which you can go back and look at. It's just, it's gonna be different than what I just taught you. It ain't different, but it just shows you more of what I was just showing you on the H4. Like this moves up here, how to catch moves on this bigger time frame. This stuff that I'm showing you right now, you're the second student that I ever even showed this stuff to. So what you getting is good content, bro. But like the other stuff that I was showing them is this stuff going down, came back to retrace that lower low, came down, retrace the lower low, even the line chart. If I'm looking for a trade, usually what I do the week before, point out these lower lows because it was a downtrend. And what I was teaching them is when the market gets back up here, you could be looking for a sell. But if you go to the 1 minute, it's still showing up. Wait on that push down. And whenever it pushed down, now you can draw your fib and wait for the retracement. I'm not going to even show you because I just showed you. Right. Wait on that 50% retracement. Don't sell when you have a bullish candle. And if you go to the 1 minute, it's still showing uptrend. From the start of this day, it was still showing uptrend. Don't go against the trend. Wait for it to even fall on the opposite side. Now, you're taking a better risk to reward and you can go ahead and get them pips. And don't be greedy. Get out. Same stuff has happened over and over again.
Right.
That's what I was teaching them this week. Line chart. Lower low, right? I ain't gonna mark all in like lower low. Market came where? Back to this lower low. What can I be doing? Getting ready to sell it. Getting ready. This is my key area that I want to look to sell. Take a sell. Get out the market.
Yeah, I see.
Taught them the fib. I got bearish. I need what? Bullish. Where do we look to take a sell? South of 50 area. Did it get close? No, but as it's getting closer, we are already on the 1 minute. Matter of fact, it's this first one. I'm gonna show you the video. I go more in detail of what I'm showing you now. As it's getting close to this 1 minute, it started, as it's getting close to this 50 on the 1 minute, it started to break. And it gave us a retrace. I just watch the video, it'll show you. It pushed down, gave me the retrace to the 50%. Now I know that I can take that sell and ride it to this H4 I had one of my students made $10,000 past his top tier account because he took that, he got off call with me and it was around this time. He took the sale with a 0.5 or something and he passed his top tier account, bro, on this move.
Just like that.
Easy,
Yeah.
easy. When
So
we
have you got funded? Or you
I haven't, bro.
trading
But
with your own?
I didn't know what it really was, bro. But because I always just been doing my own thing, even when I traded,
Right.
like everybody's talking about Forex been a scam. So everything that I learned is like self-taught, bro. And then I just was nervous about just joining anybody course, even when it came to Q. So, but now I'm starting to like understand what funded accounts and stuff is. And
Right.
I'm gonna look forward to getting funded, bro. So sooner or later. Got
Well, let me
bullet.
ask you something. If it breaks past, I mean, it's probably a dumb question, but if it breaks past the 61.8 up to 78, that's invalid.
I mean,
Don't
yeah,
take it.
don't take
Okay.
it, bro, because that's too strong of a pushback. We look at, like, say for instance, it also depends on what time frame, because look on H4, that's why I stay away from higher time frame analysis, because we don't have big accounts, right? When it came inside our 50 area on structure on the M1, it pushed down, and then when structure started to break, we would have took a buy. So our entry probably would have been like right here as it's pushing back up, and you see it closed above. So we would have been in profit when we closed. Then it pushed back all the way down, hitting probably stop loss. And then look, it came and closed right there where it had already closed at, right? And pushed from it. So like structure on higher time frame, it gives you these long ass wicks, which these wicks, yeah, it closed above our 50 mark. You feel me? That's what we wanted.
Right.
But we don't have big accounts to be, $11,000.
You can do that, yeah.
That's what that's what niggas with big accounts can do. But it's the same stuff. Now, when you go to the 1 minute and you do this, now your drawdown is probably $120 instead of 12,000. And now you can take it to the 27 extension and make 5,000 if you're using a standard lot.
Right.
Versus them, you feel me? They can put a one standard lot on there and make 50,000, but they was able to go through 11,000 or drawdown. The bigger your account grow, the easier.
Exactly. Easier it gets.
Yeah, and now you don't have to trade. I made $50,000 in a day, or
Right.
I don't have to trade for the rest of the week. I'm not that damn greedy. Or I can
For the rest
stack.
of the month.
Yeah, I can stack. Like what Q did the other day, put a couple 3.0 standard lots, catch that one move, make $230,000 and be done for shit a couple months. You feel me?
Man.
Structure doesn't change, bro. I'm telling you. Yeah,
Right.
I'm a.
Yeah, man. Yeah, shoot me the other videos. I'll shoot you the rest of the bread and stuff. Give me till next week.
Yeah, that's cool. Yeah, bro. Just pay me when you can, bro. I appreciate it, man. Send a link. I'm gonna show you. And bro, also, bro, like I said, I'm willing to help. If you can understand this, help the next person. If you got a friend or you got somebody that you trade with, let them know, bro.
Oh yeah.
Send them my way. I had some Jamaicans the other day, bro. Dude, I got on the call with them, and they really got off the call and started making $1,000 a day. Look, you already jumped in the trade?
I'm doing it while you explaining. I'm doing it.
Oh, hold on.
Don't record that shit.
Hold on, this is wild. Hold on. Hey, I had dude.
Immediate results.
Hey, hold on. Let me see it. Hold on, let me see it.
Look at that.
My man is making bread as we are on the call. This is crazy.
He didn't even know.
Hey, I didn't even know. I had dudes like make profit after the call. I have never seen somebody make bread. Oh yeah,
that's what I was doing. I was setting it up.
straight to the money.
It retraced exactly. Look, retraced exactly to the
US30.
I'm on a US30.
Yeah.
Look.
Broke this lower low, right?
Yep. Look at the entry. 35985.
Yeah.
My entry, right there.
You didn't get to the 50 then?
That's it. Well, I took it from yeah. I started my fibs a little higher though.
Ah, yeah, you can. I mean, don't get. It's. I mean, it depends on. Like I say, practice it, bro, so you can know. You feel me? Look, why? Gave us straight downtrend, lower lows, lower highs. Structure wasn't breaking. These lows wasn't broke. Now it started to get broken. Now we got bearish, and what did it go to? 50 area. You low key can ride this all the way down to look. You making bread, bro.
Yeah, my exit is 27. Yeah.
This is crazy. My boy making straight bread. But you win on a point what?
That's two because I'm trying to get funded right now. So I got a $50,000 account. I'm trading $20 right now.
20. That's good, bro. That's good.
$20.
Yeah, that's good, man. Keep it up, bro. I'm gonna post this on. Post this in the link. It's gonna be later on.
Look at that, boom.
Look, $1,000. It's pushing.
Already.
It's pushing. Also, don't get greedy, man. Take it. $1,000 a day. Take it.
Take it.
I ain't gonna say take it down, but like another thing.
Yeah,
look,
take it.
huh?
Yeah, I get you. It's like why be greedy? Yeah.
Yeah, why be greedy? But at the same time, if it wait for TP, and then I just showed you what this move. Look at this. You got momentum.
Yeah.
Gone.
Yeah. 1,400.
1,400. Now I'm telling you, bro. I don't know why Q ain't teaching this, bro. And niggas calling me a scammer, bro. It's like, damn. I don't care, but like, you feel me? I want to see everybody.
Keep doing what you're doing, man. For real. Like this. Yeah.
Your life can change.
Yeah, this shit was not planned.
Like, bro, my life changed within a month or two. When I finally, you feel me, got this out. Set the 27 extension right now.
Yep. TP hit.
Mm-hmm.
TP hit.
Good day.
Profit.
That's a good day. How long?
Almost 1,700. $1,698.
Bruh, that's a blessing, man.
You see the TP hit exactly. Look, boom, 27, and it's retracing a little. Nice.
Yeah. Bruh, that's a blessing, bruh.
Yo.
While he's on the call.
Well, no.
Bruh, it ain't like you didn't know how to trade. I just showed people an easier way. And how long did it take? You entered here at the 50?
Oh, that shit. Yeah, that shit took literally 1, 2, 3, 4, 5, 6 minutes.
6 minutes and got paid.
And it's still pushing.
Like, and this is why I turn on this Heikin Ashi sometimes, because the momentum is still bullish. I mean bearish. So you can ride it past at 27, but don't listen to me. If you want to take your profit, get out of there, take it.
Yeah. Yeah, that's all I needed to see, man. Like, good shit.
Appreciate it.
Definitely a blessing, man, for real.
I appreciate it, brother, man. I just want to see people win, bro. That's all. My man came up good. My man came up good bread. TP smack 27. How much was it?
It was $1,698.
Easy. How long did it take though?
6 minutes.
6 minutes, bro. Easy, bro.
6 minutes, $20. $20 a point. It's still cruising. Damn.
That's why I use the HK. You feel me? Now I know I can stay in this trade until it starts showing me at least one white. But like, bro, you still made a good day. Just don't get greedy, bro. You done.
Right. No, I'm done. That's it. This account right here is just for me to pass the challenge. So it's not real money, but it's showing me what I can do.
Yeah, bro. Yeah.
Nice.
Yeah. All right, brother, man. I'm gonna stop sharing. I'm gonna start recording.
Okay. Hey, so what else do you do, man? Because I've seen on your page, like you fuck with real estate too?
No. I ain't really into real estate.